We're soon going to be getting earnings reports from tech giants, with the likes of Meta and Microsoft set to report next week. Let's get perspective on how to play tech stocks this year from Jamie Murray, president of the Murray Wealth Group. Thanks very much indeed for joining us, Jamie.
Thanks for having me.
What themes will you be looking out for in the earnings from these tech companies?
So we're really moving from the early adoption of AI, which was chatbots, ChatGPT, a lot of focus on training and creating these models, to now moving to the inference phase, which is running the models, maybe agentic commerce, bringing that into an enterprise setting. And every time we see a new adoption, a new tool, a new use case, that just creates additional demand for these tools. And so we have new chips from NVIDIA coming out this year that are going to be much more powerful than what we saw last year. It's also going to be much more cost effective to run these models. And so we think we're going to see a continued explosion of growth in the inference market. And that's going to be great for the hyperscalers like Microsoft, like Amazon, Alphabet as well, who own a lot of the infrastructure and the application layers that will allow corporate America and corporations around the world to run these products across their organizations.
Do you think, though, the traditional software companies, I'm thinking about a Constellation Software or an Adobe, will they still be under a cloud?
I think so. I mean, Microsoft has a lot of software embedded in it, and we're really now learning what is the differences between all these software companies. If it's a pure SaaS-based desktop software company that is used by employees across an organization, or a software like an Uber that's integrated into a physical marketplace and a physical network. I think we're seeing some bifurcation in that. So it really is going to be a stock picker's market in the software industry. I don't believe in my gut that software is dead, but I certainly think there's some real headwinds across different parts of it. I mean, Adobe's, I think, a great example. It has very strong lock-in with its core developer market and core, the photographers out there, the media buyers. But there's a lot of low-hanging fruit in terms of generating charts and generating images that now base users can do for free on ChatGPT. So it's a small headwind. I don't think Adobe over the long term is going to be significantly disrupted, but it's certainly going to probably continue to make noise and headlines in 2026.
I guess the high-end users will need Adobe tools, but for the rest of us, you can do pretty amazing stuff with ChatGPT or Copilot.
Yeah, exactly. I mean, we're seeing similar even on a Salesforce, so CRM. Some companies use their Salesforce and CRM just to really store and organize all their client and sales data and prospect data. And now with some chatbots and some ChatGPT APIs, an enterprise could build that functionality more tailored to what they need. But then there's a whole other level of Salesforce usage that's deeply embedded in the organization, is connected to other systems. So there's a plumbing effect that some of these software companies have, where they're connected to multiple systems across an organization. And that's going to be very, very hard for AI to disrupt in the short term to medium term.
Just swinging over to Davos here, you reckon that this to and fro over Greenland is another example of Trump's bark being worse than his bite?
Yeah, exactly. So we often have clients phone us up and say, Trump's at it again. Is this bad for the markets, or should we reduce our risk to the U.S.?
Yeah.
Our view is that this isn't really an upending of the last 60 years. It certainly is a different tone out of the U.S. And the U.S., I think, is certainly poking and prodding other NATO members and its traditional allies to move more towards U.S.-centric goals versus maybe its own nation goals. And so they're applying pressure in unconventional ways, and not necessarily diplomatic ways, which is a big change. But ultimately, I think the U.S. just wants Greenland to be secure. So there's a strong, line from Europe right across to Alaska. And that's why we're seeing Canada talk a big game about Arctic investment. And we're not hearing the U.S. really criticize Canada too much on that aspect. Also, the UK has a pretty strong defense program as well, and we're not hearing Trump go after them. So it's really this Greenland piece where I think the U.S. is saying, if you're not going to secure this, then we will. But ultimately, as we saw, they came to an agreement. I think the U.S. is getting what it wants from this agreement, and so we think, again, he'll apply pressure where he can, and try and push for U.S. based goals. And there's no real downside for him to do that.
You've got a few stock ideas for us. Exchange Income Fund, EIF, Jamie, that's a stock that you're holding right now. What attracts you to it?
Yeah, this is one of our largest holdings in our income fund. And, we like its diversified business model, but we really like its Northern Canada aviation assets. And so speaking of Greenland and securing Greenland and, making sure that Russian and Chinese submarines or boats or aircraft are not coming into those waters. I mean, that plays right into Exchange's strength. They actually do intelligence and surveillance off the coast of Greenland. So they're already contracted there to do this type of work. We're going to see more of this in the Arctic and Canada, where Exchange dominates the aviation market, sort of north of Winnipeg and up through Nunavut. So we think there's going to be tons of opportunities for Exchange to grow this business. The market's starting to realize that, and we're starting to see the stock re-rate from being maybe more of a manufacturing type company towards that higher end defense multiple that some companies get. Because a lot of these contracts they earn are fixed margin. There's not a whole lot of risk in terms of the amount of money they'll make. It's just about them being able to execute it.
Major Drilling, MDI, they provide drilling services for miners all around the world. You see potential there. I guess the copper mania is going to be good for them.
Yeah, copper mania, gold mania is possibly even better. And what is really attractive about this company, it's obviously had a nice move in the last year. If you had a 5-year chart, kind of traded between 7 and 12 for 3 or 4 years, and now it's moved up to close to $15. But this is a company that when the mining cycle really gets going and all this exploration money that was raised through 2025 and all the cash flow that the big seniors and intermediates are making right now, eventually they're going to deploy this back into the drill bit, back into exploration spending. Also, before you build a mine, you have to do lots of drilling to define the entire mine pit to optimize the mine plan. And so we think this is a company that has a great 3 to 4 year outlook. And just what we're hearing anecdotally is, the rigs, and especially in terms of the labor supply, in 2026, we might see shortages of available rigs and labor to do these drill programs. And so, that's just good for margins, good for pricing. And, we think this is a stock that could have a big year in the next 12 months.
And finally, Northwest Healthcare, you're getting a yield of about 6%. You say this is your favorite REIT?
Yeah, we think this is a great opportunity to acquire Northwest Healthcare. The REIT is starting to move on some better marketing and better communication from the new management team that was brought in the last couple of years. And this is a stock that we've owned for 3 or 4 years. We've been following along as they went through a bit of a restructuring. They had to sell off a lot of assets to pay down debt. They now have the balance sheet under control. They're issuing debt at investment grade ratings. And I mean, they own hospital assets and other healthcare assets. It's very economically defensive. And what we like is we met with the company a couple of weeks ago. They're finally back to the point where now they're back into acquisition mode. So they're starting to acquire some assets. And we think when the market starts to wake up and sees that it's growing again, that this is going to be a company that is on the radar for a lot of real estate investors.
Jamie, we'd better leave it there. Thank you very much indeed for joining us.
Yeah, thanks for having me.
Jamie Murray, president of Murray Wealth Group.